And Max at eXp Realty, aka the Trading Agent. This is your live market chat for Labor Day weekend, Monday at 7 p.m. almost Eastern Standard Time. Wanted to talk about the markets, wanted to talk about some options trading, the rules, why we have them, and just what to anticipate for next week. I'm in here a little early as we're starting the live chat. Want people to funnel in. Again, want to be participating, having people involved. It always gets more fun when you can really bring experience and just some of the things that have happened in your life trading to the markets. Because again, the market is going to take the most amount of money from the most amount of people. And so if you can learn from others' mistakes versus having to make all the same mistakes others have to make, you're saving yourself your tuition bill. So that's why I love and appreciate all my supporters, friends, family. Appreciate all of the love, support, follows, likes, sharing with friends, whatever, and also the generous donations. Again, when the student is ready, the teacher appears. It's one of those things where give to get, and you learn very quickly in trading that nothing is certain. Your emotions are part of the game, and one of the things that you have to do is be evidence-based, evidence and probability-based. A lot of you folks who've been around know this. So again, this is the intro. People watch the recap or watch the review can hear this part, but again, waiting a couple minutes, figured I would fill the time with the basic semantics of this kind of video. If you're newer to the channel, like, subscribe, hit the notification bell on YouTube. Also, holler at me on the Twitter. Again, if you ever have any questions, just DM me. I'll try to respond. If you ask a question that just seems way too far out there, I might not respond. Sometimes there's folks who are like, pretend that, want to know what is the answer to life's meaning of this chart. And it's one of those things where I laugh at it. It's I don't have a crystal ball. I can give you probabilities, I can give you potentials, but folks looking for certainty will certainly find their demise in trading, because trading is not a certainty game. It's like going to the casino. It's like playing poker. It's anything else that's probability based. Do you expect to always win? You are a sucker. If you're new to the channel, want to join the Discord room, link in the description below. I will drop it in the live chat as we speak. Where we go? Invite people. Copy link. Densky. And this is the thing. If you join the Discord room, I would appreciate it if you get involved. Say hello. Have no ego. Why are you here? What do you need help with? What are you trying to learn? Where are you at in trading? What is your experience? It's the folks who come in who say nothing. Nothing. And it boggles my mind, because I'm like, what are you interested in? What do you just came here to be a fly on the wall? Because again, it's not about just handing out winners. I mean, that's always nice, but what if I am not around when you're looking at something? What if I'm on vacation? What if I'm not in the same trades as you? You got to be able to make your own decisions. You hit the enter button. Remember, always keep that in the back of your mind. You pull the trigger. No one else is responsible for what happens and who gets hurt. Keep that in mind. Because I think a lot of people in general just really like to disassociate from their actions and blame others, blame the market, blame whatever. Blame Biden, blame Trump, blame everybody. Welcome again, Discord friends. Come on in. Posting if you have questions in here, drop them in here. And that's one of the things I try to explain to people. If you're really looking at trading as a mirror, your account balance is the truth. Your account balance does not lie. If you're doing well, you're following your rules, you're executing, you're going to do great. And your account balance will show that. If you're moving your stops, you're not respecting your boundaries of this is my risk profile, and you're doing things just to do things differently, and you're trying to do 1,000 different things all the time, and you become the master of nothing. So it is 5 o'clock. So let's get started. First, I want to go what to expect this week. If you go look at the Stock Traders Almanac, the first day after Labor Day is typically bullish. Now, there's been rumors of China stimulus number 5, is it? I mean, again, you don't stimulate this hard unless things are really, really crappy over there. And I keep telling people that, that's the thing about the markets, is that they're going to be discounting the future. And I'm just warning people, China has the flu, like a cold flu. Europe is showing symptoms. I mean, sure, Europe's already sick, and we're showing symptoms. Again, I mean, the odds of recession, if you go look at some of the inversion, the yield curve, We're back at levels of the 1920s. End of the 1920s. What followed at the end of the 1920s? Now, again, I don't know if they'll go full on stimulus later and go nuts and try to like QE infinity. But at this point, you have to start looking at the rise in the market to be faded, especially going into this week. I mean, I don't know if it'll be a one-day event, blow off top, which, again, I don't really expect, or chop tops. I prefer the chop tops because then you get opportunities to confirm the levels make sense. It's I got to make a decision all or nothing right now at one moment in the morning or one moment in the afternoon. What's the higher and the lows? Those are really hard. Remember, all or nothing trading is gambling or probability based. So going into next week again, I mean, futures are flat at the moment. Monday could have some pop into it. I'd be looking to fade it. I know people are saying, well, you got Apple next week and it's OPEX. Well, we'll go look at the VIX. The VIX is at 13. Can it really get much lower? Right? Can it? Let's just look at this. A few things real quick, and then we'll get into the option stuff, because I think a lot of people are going to enjoy that part. Can the VIX really get much lower? Do you really want to wait forever to short? Is it Tuesday, not Monday? What is that? Okay, I just got a comment. Maybe I said something, misspoke. What did we talk about? Volatility in the bond market. Are you starting to see the volatility? Starting to get a little. I mean, some of these gaps are pretty big, right? It's the dollar. All right? Look at these candles starting to move. I've said this a billion times, and it's always funny because I'll get a lot of people who are like conspiracy theorists. I guess they're more like people who get the forewarning of the bad things to come. But the people who overreact too early, I've always said this about the dollar. The dollar probably shoots to the moon before it's destroyed, right? Because think about it. Who else is going to fail if the dollar goes screaming higher, right? There's going to be other people, other currencies, because we are no different than some of the other toilet paper crap out there. SPY, again, a few little things I see why. Again, I expected a bounce. We talked about this going into the end of the month. We talked about it. Remember, we talked about the dip. First dip gets bought off of any high. Now, is it higher than I thought? Yeah, absolutely. I didn't think we'd get really over the 20-day, 50-day. But little beknown to me, we get up here. Now you're back into a choppy range. Again, you go look at the monthly. This area matters, right? You go check out the weekly. This area matters. You got trend lines. You got all sorts of fun stuff going on around here, right? Just be patient. QQQ. I'll just do a few more of these, then we'll get into the option stuff. Same thing, higher than I thought it would. Do all gaps have to fill? No, they don't. No, they don't. Right? So just be careful. I mean, IWM, we've talked about lagging, popping up. Gold typically leading down. Talked about, gold, the gold miners have been a very highly risk on-off name. They typically pop. I mean, look at this. They pop and lead the market, potentially bottom with market, hitting resistance on the 50-day, old backside of the trend line. And the reason why I pay attention sometimes to gold and silver, not to trade them at the moment, but just they typically show the liquidity action. Look at the silver, rips up, hits resistance, kapow, right? Oil, I mean, you got to look at the overall market, and we've said this 1,000 times. The Feds are stuck. They're in a pickle. Kill inflation, kill the markets, or get killed by inflation. I mean, it's one of those things. Right? Their whole credibility, they're literally have two things: maximize employment and kill inflation and stable inflation. They're losing the battle on inflation. Well, they're about to lose the battle on employment too, which is scary. But all right, let's talk about options. Are you guys ready? Any questions, thoughts, concerns about the market next week? Are you anticipating maybe choppy top, buying earlier in the week because the new money comes in? First and 3 business days of the month, right? The first business day of the month was what? Friday, if I remember correctly? Yes. Tuesday is the second one. I mean, could you argue today, overseas is the new money? I don't know. We'll see. Again, futures are flat. I don't know if the markets are going to fill these gaps. I mean, a lot of people are talking about Apple gap, SPY gap, QQQ gap. They have to fill. Pro gaps don't always get filled on the first bounce, right? Like, you can see that in a lot of different places off the lows, right? Professional gap, this one filled, but here's the gap here. Here's a gap here that didn't fill. Again, I could go into this for days, but I want to keep it on topic. Any other thoughts, questions, concerns? If not, let's get into some of the option stuff, because I think this is where people, I probably should have done this sooner, but I've seen so many people get absolutely destroyed in options, and I want to go through the rules. Again, if you want to join the Discord room, link is in the description below. Love this stuff. Oops, let's zoom in. Come on, zoomy. Why is it not letting me zoom in? Open in browser. Let's just do that then. There you go. Rule number 1 in options, especially if you have and actually, let me go rule number 1A. If you are trading options, please, unless you're doing covered calls and stocks and that stuff, have a separate account. Have a separate account for just options. Do not commingle your trading accounts, because I promise you right now, there's going to be a time where you build up a bunch of money slowly in stock, and you get the greed demon, and you go, ooh, well, you know what? I made a lot of money on stock. Why don't I just juice it with options? Yeah. Let's get real excited about that, and let's get crazy. And I'm telling you, commingle it, and what happens? Pow. You make a mistake, and that's where you get to rule number 1, especially with options. Expect total losses. If you're doing naked calls and puts, now again, you can sell options, right? You can do some spreads. You can do all sorts of fun stuff, but expect total losses on the option itself. That's good if you're selling calls or puts, right? But buying them, expect it. Absolutely expect it. When you play options, you could lose 100% and gap down, especially if you buy near-term stuff. This is what I tell people. If you are swing trading options, give yourself time. For the love of God, give yourself time. If you think something's going to happen in a month, give yourself more than a month. Do not put yourself on a timer, a short leash, whatever you want to call it. All right. Rule number 2, know your risk-reward ratio. Do not buy puts or calls in something that's already made a big move. There's a high chance that will likely kill your options by chopping or reversing before the next move. Imagine the people who are buying longer-dated calls right now. Imagine people at the lows who buy puts. Those are the folks that love to get murdered. And I'm not talking about like 187 on a mother, I'm talking, like Snoop Dogg. I'm talking like their accounts just totally like robbed. Like that was just stupidity on the highest form, right? Nice zoom in there. So just be aware of the risk-reward ratio. Especially if you're buying options, right? It's great to sell them after a bigger move. Now you can start anticipating some chop. I mean, look at, if you've been following the channel, I talk about Occidental Petroleum. Love it. Love how Mr. Buffett just sells, and he's the cover call king, selling calls. Got to be careful. Rule 3, the details. Research the details of your options at lows and highs. If the IV in your option is high, VIX volatility indicators in your favor, your options are likely to value quickly if either of those two decrease. Right? Do you know what implied volatility is? Right? It's the calculation of what the expected move is per day, right? And the volatility, VIX, when the lower and higher the VIX, right? Do the Black-Scholes model. Again, it's not a super complicated formula for formulating implied, the price of options, but it is one of those things where you got to know, like if something is moved big, the IV will come in. Implied volatility will decrease because after a bigger move, you can't sustain, right? So if the IV goes from, for example, say like Apple's historically around 1920, it goes up to 40. Well, you should probably expect it to come back to 20 maybe at some point. And it could happen just in a couple of days if the market or the stock goes sideways. So know your time frames. Don't buy weekly puts for a trade that might not happen for weeks. If you're swing trading, give yourself at least 6 weeks or more for the move to play out. One of the biggest mistakes that people make is not giving themselves enough time or not allowing the full move to play out due to the feeling of the time crunch. You can always manage the size of the trade as the move unfolds. Giving yourself time also allows you to swing and adjust your options, right? Say you buy 3 months out worth of puts. What if you know there's going to be a counter rally? And you're like, well, you know what? I don't want to take all the puts off. You take some off and you buy some calls and you hedge. If you give yourself no time, you have to be right away. And that is the single biggest killer of swing trading, right? Especially with options. I mean, it's easy in a bull market when everything's just going up. Or it's easy post-COVID when everybody's like liquidity just coming into the market. Now it's not. It's a trader's market. It's been like that since November 2021. If you aren't sure, layer out a trade a little. If something is down huge, quick with puts, the implied volatility explodes, the VIX indicator bumps up big, It's probably better to take some profits at this point. If the stock seems stuck, maybe you should take some off and come back later. Know your time frame. Buying options is like buying fish. You can only hold them for so long where they start to stink, right? That's sometimes what you have to remember is that implied volatility has to come down. Maybe the market's going seasonally into a time that counters your trend. Just be careful. Just maybe you need to take some off. I always tell people you can't go broke taking profits. So, all right, here where it gets real juicy. If you're picking bottoms and tops, you want to sell options at the first bottom, or top, or touch of the resistance support. The additional retest is where you buy calls or puts. You can even use this intraday trading. It's the first test you should buy or short stock only, and then the retest buy calls or puts. If you're going to trade in the first hour, remember the spread and the options are amazingly wide in the morning, and they will get you in trouble. If you were playing the game where retests happen 80% of the time, bull and bear trap, some sort of retest game, buying options on the first move seems genius when it's a V bottom or whatever upside is a V top. But when it's not, you are the idiot who's going to lose. Even if the stock goes in your favor, you're going to lose premium from melt, premium burn. Does this make sense? Again, if you have any questions, interrupt at any point if it's related to this. Rule 7. This is probably the most important rule. If you trade X amount of stock, then you should trade 10% of X for your options. Say you have a $100,000 stock account, you should probably only have $10,000 worth of options. Because if you go back to rule number 1 and you fuck that up, it's only 10%. Never, ever chase with options. I know you might have gotten lucky before, but overall it won't work. In normal times, the market chops just as much as it rises and falls. The only exception is during a breakout or a breakdown from verified major level support. For example, when something bases for long times, weeks, or months, and then it breaks, sometimes those are the best times to buy calls and puts. Because again, the volatility has gotten sucked out. You know, like Daniel Day-Lewis from There Will Be Blood. I drink your milkshake. Options makers have drinking all the milkshake. We've chopped in a range. Then it goes. And why would it go? Because then they've collected back all the options, right? They become worthless. Rule number 9, if you're going to lose, assume you're going to lose. If you don't do this, you'll hold on to way longer than you should. This type of leverage should be utilized to get the quickest move for the time frame that you're trading in. Counter moves happen, so be prepared for them and only use options to get the quick and easy money once the move has started instead of trying to squeeze every potential penny out of the move. Now, this might sound a little counterintuitive to swing trading, but this is more for day trading, especially for day trading options. Weeklies, right? Don't be surprised if all of a sudden something rises a bunch of points and you're going, oh, I got to get richer. I'm going to get richer. Just let it, take the profits. You can always come back in. Again, this isn't about hitting home runs on every swing. Think of baseball analogies. Singles are fine. Sometimes you see the fat pitch home run. But if you go swinging for the fences every time, you're going to strike out a lot and your batting average is going to suck. Just remember that. Rule 10, know the IV of her stock. If the IV is jacked, it means the options are going to be expensive. Trading will be wide and loose, which can be expensive. Easily take out your stop, and if the IV drops suddenly, your premium drops with it. You've probably been there if you've traded options, right? You've been in a stock, and it's like moving crazy, and you're like, oh, I got to get on in it. And the IV and the option spreads are a mile wide. Then all of a sudden, it just goes nowhere for a couple hours, and again, there will be blood. I drink your milkshake. Market makers drinking it all. Rule 11. Ask for help. Unless you've traded options for years, you don't realize how the spread, pricing, seasonality, decay, market, and all the other things going on affect your options. In this case, the best thing you do is simply not trade them. If you can't trade stock well, do not trade options. That should be clear. Clear as day. I hope. Right? Oh, open a new tab. That's how we got it nice and zoomed in. Come on. What you doing here? Apologize for the bad driving. Open in new tab. How do we get it to blow up? All right, well, then we'll just zoom in, right? Rule 11. I've been in trades where the underlying stock went up 10%, but the applied volatility and VIX indicator were so jacked that the options went down as the IV and VIX unwound. This is why call buyers at major lows usually get crushed. This is from experience. At major inflection points, in bear markets, bull markets, big drops, those folks that seem like absolute geniuses, I nailed the bottom, buying calls, Well, when the VIX is at 30, 40, God forbid 50, maybe you've seen a bear market where it's in the 70 or 80. The stock, if it doesn't go ripping higher, those options, as the VIX volatility indicator comes in, those options get destroyed. It's almost like you're right, but you're wrong. It's like holding on to like grasping, like if money became sand, you're like, I got it, a full handful, and you squeeze it, it's like, it's gone. And it's gone. Rule 12, wait. Buying options that open or before a move happens might seem logical, but is actually a major gamble. We all gamble, but at least know that you can lose with all options with stock. You might just have to endure the heat for a little bit. And I will add to this. The second mouse gets the cheese. If you're waiting on news and you're trying to anticipate being real smart, but the news comes out pre-market, 6:30 a.m., whatever my time, 7, 8:30, whatever your time, and you have options going, wait for the news to relay itself and then trade it. It's much easier. I promise you that. Whew. All right. Hey, Joe, I'll end your extra question. Let me run through these real quick. Rule 13, beware sentiment. If everyone's pumping the same idea that you're about to get to, then you're probably right on the edge of the counter rally in the stock. For example, any Tesla calls bought in November 2021 as the stock kept going up, pop opinion was that could never go down. Higher price. The targets were constantly being upgraded. This is great if you already had calls from earlier months, but if you had chased them in November, you probably got screwed. Once retail is all over the trade, you need to look around and go, are only the suckers buying? Always. Options, pin action, and large order sweeps that aren't the holy grail. You don't know if the market maker is doing what is doing and who's on the other side of the bet. For example, a whale might purchase a giant number of shares in particular stock betting that will move upward. Later on, the stock nears resistance. The same whale might enter a big put position as a hedge against a huge amount of shares. When the puts are purchased, all you see is a sweep of puts being bought and assume that someone's actually betting big against a stock. But in reality, they might have a much larger bet to the upside. And guess what? They might just be hedging. It drives me crazy. Oh, I was watching the large action in options and sweeping through, and it's like, oh, it has to go. I'm like, dude, I've been doing this for so long. It doesn't guarantee shit. Back in the day, only the pros were using options, and it was a little easier. But now everybody is. The goal is to murder them. Just remember that. Always know what's coming. An important news release or specific upcoming event, FOMC, meeting end of the first of the month, options expiration, earnings release, product approval, etc. If you're buying options completely unaware of upcoming catalysts and the potential market dynamics, you can get wiped out. For example, buying puts after a huge down move right before the FOMC. If the stock has low liquidity and wide option spreads, you had better be sure you know, and know that you know, that the move is underway, happening right now. If it isn't moving in your favor, you could take a 20% loss in no time, literally. Even if it does move, you still might not be able to sell at the price you want due to the low liquidity and wide spread. Think of certain stocks that we follow. Sometimes I'd say like PXD, right? Some of the solar names, sometimes some of these commodity names. Right now, a lot of people aren't trading those options. And those option spreads are a mile wide and no liquidity. So you're trading against the market maker literally on your own. It's nice when you're trading Apple or SPY or QQQ options. Well, yeah, you got other folks, not just the market maker. But when you're going straight up against the market maker, expect to be taken out back behind the woodshed. Don't be surprised when they bring a belt and spank your ass. All right, well, sorry. Rule 17, like with stock, the more something moves in your favor, the less you should own. With options, though, you should take more off when it moves. If the move is bigger and you want to pay a risk, this is what you do. Here, you could run through this example. Again, if you want to join the Discord room, hit pause here. Again, what I tell people is let's run through a specific example for, say, the financials. Because there's a lot of folks in here. If you've been following the channel, what did we do? What did we do last year? What did we do? Many times. We shorted FAS. And you could bought puts. Again, here, wasn't surprised, took a little off, let it ride, and then when they got down here, it didn't matter that I was trying to take more of your money off. You never knew. But then remember, the FAS follows the XLF, and what did we say? What did we say? Do you know why the XLF held? Again, it's so easy. Look at the monthly. People never zoom out. Why would this air? Oh, shit! It's the highs from 2006. Yeah. When you are trading options or swing trading long periods of time, for the love of God, if you don't start at least on the monthly chart, I will come through the computer, monitor, your microphone, whatever, and slap you. I am so amazed how many times folks on Stock Twits, FinTwit, Twit, are like, do you see the chart? It's going higher, it's going lower. And I'm like, maybe for the next day or two, maybe the next week, but I hope you know where you're at. Speaking of XLF, fill in the gap. All right, Joe's got a question. What's up, homie? My NC State friend. I'm curious about selling options at hedge. Let's say the scenario is first drop off the highs, get long-dated options that I want to hedge. Well, give me an example of a stock. Maybe I can dig in for you. Let's let the advertiser speak for a second. Yeah, Joe, if you're around, give me your stock and let's just run through the example. Because I think this is where it gets... Okay, SMH. Perfect. This is an easy one. Now, we all know NVIDIA is about to get curb stomped at some point. So when you look at first, this is where it gets interesting, right? Look at the monthly. SMH, right? Attempted breakout, right? And fake out. This area matters, clearly. Are we going to go back to the range highs? I don't think so. But it looks like, to me, I'm not sponsored by the Golden Arches or McDonald's by any means, but let's just make it the Golden Arches. Right? Let's make it da-da-da-da-da. Retest. I'm loving it. So you're watching that. If you have give me your puts. I mean, what puts do you got? If you say you got like November puts, first dip clearly got bought. Now you're making like the double head and shoulders, like the double shoulder. I mean, you can see very clearly like this area is going to hold here. October's bought at that high. Okay. If you had October's, either you take the profit on the puts or you bought some calls as hedges. And that's where sometimes it can be hard. Oh, short-term calls instead of selling puts to hedge. Yeah, and see, this is where sometimes selling the puts might be, if you have the liquidity in your account, is the best thing. Because you can just let that premium burn. And selling puts, say you sell the puts and you just know it's not going to dump. You don't have to be perfect about it. But when you buy the calls, you got to be quick, right? You probably, again, I don't know the options pricing, but if you didn't sell those calls on this day, they probably are cheaper here. Does that make sense? And so at this point, the first dip but you need confirmation. And so you need obviously to get below 143. If I was longer dated October puts, I think you're good. It's just don't be surprised that it doesn't move in your favor right away. Yeah, and that's where it's always a little harder if you buy the calls, right? Because you can't be perfect. Like anybody, and this is what you talked about in the Discord room. Like I'm amazed we got the retest. Let's just call it what it is. But this was the best day to sell the calls because the implied volatility exploded with the move in the stock, right? You had a big gap up, right? You go from 152 up to 156. So the IB was screaming. Now this is the retest, probably a trap. Do the gaps have to fill? I don't think so. Joe, if you got any questions, more clarity on it. Again, there's not, and this is where you have to practice trade options. Like there's not an easy answer. If you know the first dip's going to get bought, selling puts at the money, out of the money, the safe way, but you're not going to make a ton. And so that's where, if you want to use those puts to finally buy calls on some point and then trade around it, it just makes it for a lot of work. And that's where swing trading options, 10% of X. You should not be going six figures on options and thinking you're going to, trying to hit home runs. Because you will hit home runs in options, but you're also going to strike out. Like, that's just the reality of it. I have AMD 120 calls for September 15th. Those are worthless. They're going to be worthless, I think. I think AMD's toast. We've talked about this. AMD's dead. It's dead. This was the blow off top. Here's the retest. Distribution. It's forming on the monthly, what I call the go F yourself formation. The thumb's a little higher than I thought. Here, I'll draw it for you. Eric, if you're listening, you love this. This is one of your favorite formations on the monthly. Here's your middle finger. Whatever. There's your thumb. And you get the picture. Market makers giving you the old middle finger. Right? I wish I could. Yes, the FU formation. And so, yeah, AMD's toast. Just get out. I mean, it's just a matter between the butter melts. And we talked about it, right? Like we said, hey, go watch previous recaps. I know Jay Soul says big fan of mine, friend. I don't know, fan. Shit, we're not fans, we're friends. Love the guy. We talked about it, like watching the 100 area. We just like said what, 110, 112, maybe. But this is the thing, like names that are acting better are over that the August 24th highs. Names that are acting like shit aren't. And AMD is acting like what? Shit. And it has the nature of this. Like you can see like it does this choppiness before it dumps. And so it's just a matter of when, in my opinion. And again, you have to remember, if the market holds up, is AMD going to absolutely dump? AMD is the best stock for puts. Dumps harder than anything else. I mean, you're about to see NVIDIA dump harder than J-Lo on Ben Affleck. How many times? I don't know. Cisco is calling from 2000. Where am I at? I guess we're in the charts phase. We don't need to talk. Yeah. This is, again, if you have any experience trading, you do realize Cisco never went away. Look at it now. It's so funny. But this is wireless computing was the future. Zing, zing, zow, kapow. Look at this. Look at this. Never went anywhere. Does this not look similar? I mean, it's similar to like Tesla. I mean, it's almost like, I know a few of you guys have been around. Remember when we said, this is it, y'all. This straight line move up is the end. Oh, here's that middle finger formation again. Crap, I missed it. But here you are in the thumb. Kapow. How many people remember the 2021, how I was just like beating people down, like, please, you got to dump this stuff. I was like, this is the end. This straight line move ends. Just like if this was, flip this upside down, you go, that's a bottom. You'd say it's the bottom. Straight line moves at the end. Or start of the straight line move, and then when you get major action, blow off. Look at NVIDIA. I mean, I don't know how people are just sitting here going, ooh, it's going higher. Okay. Hits the 1.618. We said, hey, I mean, how many times did I say last week? And it could still hit it. I'm like, wouldn't it be just hilarious if everybody's betting on a rise to 520 or it has to get back over 500? What was the high on Friday? 498. Bob Barker special without going over 500. Haha, middle finger is what you call it, head and shoulders. Well, again, you have to remember on the monthly, it has like your thumb and your pointer that are kind of awkward, but it does have some sort of index / ring finger humpiness to it. But again, it's the monthly chart. You just got to use it for reference. You don't use it to go, I'm trading off the monthly. Because months, I mean, if you want to swing trade for months, go right ahead. But ideally, you can't short forever. That's what I always tell people. Like, there are massive, on average, a bear market rally is 17.3% or something stupid. So you can't just stay short always. And if you're going long at this point, it's the same thing. Like, the last leg down, and this is how you know you're at the bottom in the market. People will just go, they laugh at this analogy, but it's literally that simple. You'll know you're at the bottom when everybody hates stocks. Does everybody hate stocks? No, you still got FinTwit. I remember I got booted from StockTwits for telling people, like, the market's going to get absolutely slammed back in the day. Well, this was some of the other years, but some of the other folks, I mean, Yahoo message boards were really big in the 2008, and we were talking about oil getting absolutely destroyed. Like, people don't like, again, the sentiment is that when the market is ready to sweep everybody, that's when it sweeps out the legs, Johnny. I read too many people are positioned short in that market makes me skeptical the market will dump. I mean, did we not see the big ES future short get totally unwound. The VIX is back at 13. Who are positioned? Again, I don't see people positioned short. I see people positioned buying calls and puts trying to make a ton of money immediately. Middle finger higher than the normal head gives me an arm move down. Yeah, the arm move down is the roller coaster, is the rock. Sorry, just reading comments. It's funny because, I mean, again, are people positioned short? I mean, who are people? Because, I mean, I have I have dozens of people, I want to say that, like I have dozens of people messaging me about the stock's going higher, this stock's going higher, gold's going higher, this is going higher, this is going higher, but then the charts don't look like it, and they've hit certain positions. I see bears giving up completely. Again, we talked about it. The first dip gets bought, and bears give up. Clicking the pen. Just people I follow on X. Okay, well, I mean, I understand. Maybe then that's the thing. Maybe we need to chop out. And this is where it's so hard for swing trading if you're going short. What causes the next down move? Your guess is as good as mine. Anyone's guess is good. I mean, we don't know. You don't know until it happens. Is it news? Is it just the market action? Is it just you need to get through options expiration? But this is the thing that has me quite confident we're close. The VIX of the VIX breaks below the range lows, coming back in. The VIX now back at levels that is just like, whoa, 13, you filled the gap. Again, we talked about it up here. I said, don't be surprised if we get back into this box. Damn it, you idiot. Went below the box. You're such a shithead. You should have known better. No, you don't know. But the probability said it would come back into this box. We got there. Trying to, again, guide people the best we can. Again, if you're looking for certainty out of me, I am only human. We're going up against institutions, market makers, algorithms, funding of hundreds of millions of dollars. We're just trying to swim in their wake. So please, be kind to yourself first. If you find yourself angry at anyone, the market, as I said earlier, you're mad at Powell, you're deflecting your own anger at others, and just own it. You're going to be wrong. This is like poker. You can get pocket aces and still lose, my friends. It's just that simple. All right. Hope this has been helpful. Any other thoughts, questions, concerns? Because this is where it gets, to me, a little more juicy. I love to answer the questions because I've made every mistake. Easy. And this is the thing. You're going to, it's like life. I mean, we can have a life analogy if you want. Are you always going to be perfect? If you are scared to act, will you ever win? Think of it in attracting a mate, getting that promotion, excelling. You're going to have to lay it out there and give it a try. You're going to have to ask that girl out. You're going to have to ask for that promotion. You're going to have to work hard. You're going to have to read that book. You're going to have to better yourself. If you're just showing up to trading thinking you're just going to fucking win, you're delusional. Life doesn't work that way. Now you're asking to go up against a mechanism that literally is a reverse ATM, and somehow you're just going to come out on top. You might as well send yourself the check to me. I'll put it in the Marcus account. I'll get you the 5.3%, and then when you're ready, I'll send it back. Can't lose on that. Again, link for the Marcus account. Tight. I love this stuff. If you haven't used the app, it's absolutely dope. Easy to use. Easy to use. On the website, thetradingagent.com. It's in this video. It's in the links. It's everywhere. Where is it? Marcus by Goldman. Goldman owned by Buffett and some of these names. Are they going out of business? I don't think so. And even if so, FDI insure. Make sure you have multiple accounts, multiple places. Get under the 250 or 500 combined. Whew. Oil. Again, did you check out the weekend review? Back testing some trend lines. Bitcoin, absolutely stuck. We talked about this. Natural gas, stuck. Any other thoughts, questions, concerns? Because again, I'm here to answer questions. And if you just want to make fun of me, I don't care either. I don't care. I have a lot of people. So here, I'll go into an example of some person hitting me up about Amazon.com. Did we talk about what? You got the gap. We filled this after hours on earnings. Great short up in the 142s. Talked about probably going to hold the 50-day if the market holds. So far, so good. I have now folks telling me that this is a screaming buy going to 150 or 60. You're higher than a mother. Beep, 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 beep. Now again, if the market rallies, I guess it could, but the odds are not against such. Look at where you're at. Look at this resistance zone. 80 to 144. Coming up against a zone that has muscle memory, right? It does muscle memory, right? Look. Just look at it. I mean, I guess I'll try it from here and then... It's got the muscle memory. See how this works? And if this is a low or high, get out of here. Because then this could be another waterfall. And if it is a waterfall, maybe it stops at 81 for a minute, but then it goes zoom, zoom, zoom. And, you know, people always say, like, what's your favorite moving average? The 200-month. 100-month is strong, or the 200 is sexy. If people are like, can it really happen? Then you have not seen what happens in bear markets. Literally all liquidity gets pulled from the old winners. Amazon is an old winner. We're not saying Amazon's not going to be around, but what I'm trying to tell you is that at some point, these stocks have no upside. Everybody's all in. Then money rolls out of tech and goes into commodity, and now commodities that have been trading at 2, 3, single-digit PEs start going double, triple, 30, 40 PEs, and then your favorite tech name goes from historically it's traded at a 23 PE in a range of up to 40 to 50, and at its high it was like 80. It can get there again. No, it's going back to be a value stock at some point. Be positive. For me, my main issue is stop loss. I don't cut and lose all. That's when a good setup comes. I hesitate and don't enter. How do you convince your mind to take losses quickly? Great question, be positive, and it's not a positive response. Assume you're going to lose. If you have in your mind that you are going to lose and you're not searching for evidence to be correct, you're actually searching for the evidence to confirm you're going to be wrong, and then if you're shown incorrect, then you do it. I've always told people this, you have to be very aware of your brain. Our brain, subconscious, conscious, loves consistency. You do not get into a trade thinking, I'm going to lose. So as soon as you start losing, what does your brain do? Well, let's look for evidence that we're going to win. Even when you're losing, your brain is still looking for anything to confirm that you're going to win. And then it freezes you. And then once you get frozen in your popsicle, you're going to melt. Because then you disassociate. That's the next step of this, right? Well, my brain is looking for positive information only. Now I'm looking for positive, I'm not seeing it. Well, the next level is denial. And then you just don't set your stops. You don't execute your discipline. And now you go and you rationalize a million reasons why you should hold versus a million reasons you got to get the fuck out because there might be a better trade. There might be something else out there. It's like dating somebody and they're just absolutely dog shit. Let them go. But people can't do that. The mind likes consistency. The subconscious loves subconscious. Subconscious is a fucking broken mechanism of us. It's all or nothing. People don't realize that. Only with conscious awareness can you control it. You're going to get into the stage. I mean, I've been there. The reason why I can explain is because I know it. I mean, I've studied the psychology of my own losses. I get into a trade. I don't anticipate to lose. Well, if my winning percentage on average has been 80%, maybe I'm on a freaking hot streak. What if it sounds like I can throw a dart and I can hit bullseye with my eyes closed, looking, or with my head turned the wrong direction? There's going to be times where you're like that. And all of a sudden, you got to be careful of that little fucking voice inside of you. Remember, they say pride before the fall. Right? Pride before the fall. But what if it's not even pride at this point? What if it's just the trade is not working out? You have to remember, you're going to look for evidence, and then your brain is going to disassociate. Because it doesn't want to admit failure. right? Especially in uncertainty. Especially with uncertainty, because if there's uncertainty out there, what are you going to do? You're going to rationalize, I can be okay, right? In that time, losses become bigger and even harder. Yeah, and again, that's the thing. That's why you have to define your risk before you even start. If you're not doing that, your brain is going to talk yourself into mistakes. If you believe it is a bear market and you sold at a good price and the market drops as expected, you then are expecting a counter rally. Do you close your positions or hedge? How do you hedge? On average, bear market rallies are 17.3%. Straight line moves precede the down move, ending. Just like at the highs, straight line moves. Here, well, this is a great example, Jason. Thanks for asking. How many people remembered us shorting all this? What did we always say? Once the VIX explodes somewhat and you get these straight line gaps, remember, gaps are traps at the end, novice gaps. Yes, you hedge. But this becomes the hardest point. This becomes the hardest thing. Because if this was a complete bear market, like just game, retesting levels, the next move is going to be fugly, y'all. I mean, we're not going... I'm trying to think of like the Star Trek voice, Captain Jim. We're not going to be on a smooth ride. It's probably going to be the higher low and failure. How low? 200 month, come to daddy. But it won't be a straight line either. It's going to be hard. Remember, we talk about banking failures, all this stuff. It's just not easy. But this is the thing. You have to always be aware of, if you're shorting, Jason, you're not going to be able to short always aggressively until the last move, and that thing is going to be so damn scary. It's going to feel like a roller coaster and then the big drop. If you're trying to get every piece of it, you're going to struggle. And that's where, when we talked about shorting, people got real mad when we would get out early or would get into longs and sell puts early. And they're like, it didn't turn around right away. Right? Remember these? And this was easy. We got lucky. We got stopped out and then it hit there. Talked about buying here. Talked about buying here. Surprised it went higher, but you got stopped out. That's part of the game. But do you understand, though, like the reality of this is that just take big chunks. If you marry any one thing, because you just don't know at any point what the narrative will change. If the Fed goes full liquidity, reverses, and goes QE, you don't know. However, we do know that it will end badly, right? I've said this, and I will say it, and I'm going to stick to it, and maybe I'll sacrifice myself on this, but it's always been this. I don't believe the bear market's over with a VIX of 38. I've seen bigger spikes in the VIX many times in my lifetime. You got to get up into the high 40s. And again, if this is a real bear market, now again, COVID I think was kind of a shit stick, but here it is. Here was the chop before the pop in the VIX. Now we're back at the lows. It's a hard question to answer. So we're going to have to follow on the channel, try to do the best we can to navigate this. But again, the top first dip gets bought, which it did. Now what? I've always warned people, if you're not familiar with the seasonality of September and October, this is when the shit can hit the fan. Because think about it, institutions, money managers, hedge funds, their yearly performance is calculated when? In the start of the fourth quarter. If they have a sniffing of issues, if they smell at all that they might not maximize their bonuses, what are they going to do? They're going to dump. And that's what happens. That's why the biggest crashes have always been in October. Right? Just, again, March and October have been typically some of the biggest moves. Hope this helps. All right, next questions. What's up, my homie? Sam, one of my errors is I enter a position, then it goes against me. I double down and it keeps going against me. I stop myself out, and then it bounces right up. I mean, that's a typical error. That's a typical error of everybody, right? Like, because again, you trade gold, right? Let's give you some gold examples. Man, this thing is just, once it goes, it's going to go. Sorry, I'm getting like a gold boner. Swing. What did we say down here? Do you remember this? I was like, let's wait for the sentiment to get so bad and everyone to give up to buy gold. We bought it, wrote it up here. Clearly should have written it higher, but there's other trades, right? Picking the levels, you expect the retest. And this is where you can't fault yourself for making that mistake, but it depends on your time frame too. Like, if you buy something close to the highs, close to the highs, or buys close to the lows, if you don't buy it all in, you can give yourself room, right? If you only buy a third, and you would say the whole position you want to give it like $3, but if you only buy a third, that $3 is only of a third, and you calculate out your loss, it's like, all right, well, I don't want to lose anymore, so maybe you make it $4 for just a third. And what do you have to always expect in your mind? Like, picking bottoms, typically a retest or a higher low, right? Tops, choppy, V-tops, head and shoulders tops, but that first dip either becomes the right shoulder or becomes what? Like a lower high. And that's where it can be really complicated. And, as someone who's traded gold for a long period of time, again, you guys know why I love buying in December, end of the year, especially if we start peeling back for the rest of the year. If we can't, they'll dump gold at the end of the year. They typically do. You have to have in your mind, like, just this predetermined plan. And you got to stick to it. And this is where I hate to, like, bash people, but I'm going to bash myself. How many times you said, I'm going to go on a diet, and I'm going to do this, and I'm going to stick to my rules, and I'm going to stick to my shakes, and I'm going to stick to going to the gym, and I'm going to stick to consistency, and you don't do it. If you can't do it in your life, you probably can't do it in trading. That sucks to hear, but that's the reality. Remember, your subconscious is an all or nothing mechanism. If you're really good at sticking to your plans and goals and your disciplines in your real life, then it's not going to be hard in trading. Well, what if you are good at doing that in your real life? Why is it hard in trading? Well, this is where you add the next layer of bullshit, essentially, crooked wiring. There might be an underlying wiring inside your head that says you don't deserve to win. Maybe you believe money's the root of all evil. Maybe you believe some sort of stupid subconscious wiring brought in from your parents. Maybe brought in from when you were a child. Maybe from a mistake, a belief that someone was planted in your mind by an uncle, a brother, a friend, a coworker, or not coworker, but when you were younger, that somehow you aren't deserving of abundance. You don't deserve to win. And I'm telling you, if that shit is wired inside of you, it's going to self-sabotage your trading. People don't like to hear this part of trading, but that's the problem. Is like, you might ask yourself, like I asked myself, there was a time in my life when I felt like I couldn't win or couldn't lose. And then there's a time when I was just like, I can't win. I mean, it's like, what are the odds of losing 20 in a row in trading? I mean, that's really, you got to be really good at losing. I asked myself at that point, like, what was my internal beliefs? I had hit my maximum capacity for winning. I believed I didn't deserve to win more. Some part of me had this governor, like on an engine. Remember, some of y'all might remember this as a kid riding around in the go-kart, and you disengage the governor. Now you can really let that motherfucker go. Well, there might be a governor of subconscious believing that's holding you back from how much you deserve to win. Like, you are only as good as the subconscious wiring inside of you. And you will find a way, if you don't believe you are worth it, you deserve to win after a certain point. And I'm telling you, a lot of folks don't ever get to that point in trading because they never make that much money. But there will be a time. And maybe sometimes it overwrites so much that these people don't even win. So again, if you ever have questions about the psychology and you really want to go deep into it, schedule a counseling with me. I will gladly walk you through it and explain to you. I've dug deeper. Because again, it's not like I don't know how to trade, you guys. Like, I make mistakes, but it's like you have to realize at a certain point, the underlying mental story and wiring controls your responses. Was surprised how the market just kind of stayed afloat in the end of the week last week. When do you decide when to leave a short position and when to get out at the first layer and wait? Again, you have to define your risk before you get into the trade. There's not an easy answer. Some people have different risk tolerances. Some people are better about position sizing. Again, whatever your plan is, you have to stick to it. And that's why all or nothing trading is really dangerous, because now it creates emotion, right? You want to be, when you're trading, you want to be so emotionless. You want to just be like, all right, here you go. We talked about hedging, right? Short positions. Talked about buying calls. Said the 20-day, 50-day, and again, took off most of the calls on this day. Didn't realize it'd go that higher. And then I said, all right, well, I got to be patient here. I have winning shorts. I have positions in certain things. Again, because we're watching using the market as a reference. Could it go much higher? I guess. Do I want to give back profits on some positions? No. But then there were certain things that I let myself get covered called out of too. So now they got closed out on Friday. Now I have the cash. Again, this is where it gets really difficult, because every account balance is different. Like, I wish there was an easy answer. And I would say the easy answer is always to start with one option, 100 shares, and work backwards. Does this make sense? Until you're comfortable with what you're doing, you can't try to be a big dog. You're going to get pissed on. None of us are big dogs, honestly. Start with 100 shares, one option. Play the game through this, again, selling calls. Because, again, if you want to do covered option positions, I love it. That's what you need to do. But, again, have your options account. If you're going to trade options strictly, please, for the love of God, like I talked about in the beginning, have it in a separate account. Please, 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 please. Do not commingle naked options with your stock. Remember, 10% of X. 10% of X is your stock account. If your stock trading account's 50 grand, your options account should start out 5 grand. Because at some point you're going to blow it up. Or you're going to make mistakes that are detrimental. And if you blow out your account balance, once you lose confidence in trading, it's like anything. How many of you guys have watched a golfer make a mistake in his career that literally destroys him for the rest of his life? How many times have you seen a guy miss a putt, hit one off into the trees, and all of a sudden the round goes to shit? It's no different in trading. You have to have like this mindset of protecting your mechanisms in your mind for like Jordan, Brady, the best out there, Jeter, whatever. These guys strike out, miss a shot, but they don't let it affect them because they believe in themselves. And once you lose belief in yourself, it's like you can't win, right? Because your body and your mind are going to go into the self-protecting mechanism to like stop trading. It just leads to pain and losses. We've all been there, y'all. We've all been there. Yeah, I mean, be positive. I'm reading like the psychology of trading. It's like a lot of folks, and this is where I talk about this. There's a lot of great folks that I follow and talk to in the trading rooms, and I'm like, a lot of this comes down to psychology at times, y'all. I don't know how to like get inside your head and go, why do you do that? Only you know the answer. But you have to be willing to step outside of yourself and be the observer of your own thoughts. Remember, like in psychology, they're like, there's that inner child, right? Or you've had traumas in your life from trading or money or relationships. Your body and mind put yourself in protective mechanisms, potentially, to try to what? Stay away from uncertainty. Try to stay away from gambling. Stay away from trading because of pain. I'm telling you, you have to be able to look inside your own head and be your own shrink. And it's not easy. Because you're not going to like what you're going to see. Right? My grandfather, and here's an example of my fucked up wiring. My grandfather always told me, I was born with a silver spoon in my mouth. Was I really? Life as a kid wasn't terrible, but listen to what my grandfather went through. As a young boy growing up in New Jersey on a dairy farm, his brothers kicked his ass. He was the youngest. They picked on him, beat him up, tortured him. They were rough on each other. Let's just say that. Being the youngest, he got the brunt end of the bullying and the bullshit. He went off to war. World War II. When he came back, his dad drained his savings account. He came home from war and what? Had nothing. No money, no nothing. His dad looted him. His brothers were assholes, and he had to start on his own. Now, comparatively speaking, yes, I think I was born with a silver spoon in my mouth because I didn't go through something like that. But guess what? There was some part of me that believed I wasn't worthy. Do you think on a conscious level I believe that? No. But he used to always say that. He's like, oh, you kids are spoiled. You have it so good. Well, we grew up middle American. I don't know. I look at it and say, I think we had decent upbringing. Weren't exactly poor by any means, but we also weren't like, I don't know how to explain it. We went on trips. No, again, maybe comparatively speaking, yes, but there was some part of me that was just, that's what I believed. I didn't deserve to excel beyond a certain point because in my mind, I wasn't worthy. I didn't have a hard upbringing. I didn't deserve it because it wasn't always so hard for me. I didn't have to battle through what my grandfather did. And remember, your parents and your grandparents' shit gets imprinted on you. That's the reality. I don't know why. And I can still like think about these thoughts and I like look at them like the shrink, pretend I'm Freud looking at myself. Maybe I'm smoking a cigar or like a pipe. I'm like, now, Dan, why do you really believe this bullshit? Well, because as a young kid, you don't know how to disassociate from reality, the beliefs that others have. Right? From like 0 to 7, you're literally just absorbing this shit. Like your frontal cortex is not there to disassociate like from reality. It's just everything that gets pumped in. So maybe take a moment after this recording. Think about some of the beliefs that are wired inside of you. What did you hear growing up? What did your parents say? What did your grandparents say? What do people like what did they believe like that became imprinted on you? Be honest with yourself. All right. I'm going to wrap this up. Hopefully, if you appreciate this kind of stuff, let me know. Give me some feedback. Maybe I'll try to do. I kind of like these. I like the live market chats too, but I like some of these. Give me a topic. We'll dig into it, and then we'll go into free chat. Because again, a lot of it always comes back to what? Are you trading well? If you're expecting to hit home runs and you're putting number amounts onto your trading, you're fixating on numbers versus asking yourself, are you trading well? Well, what does trading well mean to you? If you're trying to say, I got to make $5,000 this month and you only make $4,950, are you trading well? Well, what if the market was incredibly difficult? Yeah, you traded well. Be thankful. Be appreciative. Remember, the universe like attracts like. Have an abundant mindset. Be willing to share. Be willing to help out. Willing to give to others. Willing to help people because you are an abundant person. If you come from this lack and greediness bullshit, I'm telling you, it makes you feel like you got to get every penny in the market. And if you don't, then you're a dumbass. And that's just not true. You do the best you can with the evidence you know and how to respond. Perfection is by far sometimes one of the biggest problems in trading that screws people up. That's why I always laugh at folks who are like, oh, I have ADD and I have these like disorders and this. You got to think it's harder for me. Okay, maybe it is, but you still got to realize like there's bottom line fundamental rules. Like all or nothing trading doesn't work. All or nothing beliefs don't work. How you're going to handle that, I can't open up your brain. I can't take the freaking can and rewrite it for you. You got to do it yourself. All right, it's been an hour. I appreciate everybody. I love it. This is good stuff. If you have questions, use the Calendly link. Hit me up. Either way, have a great week. Be prepared. Remember, the Tuesday. Tuesday post Labor Day, typically bullish. We'll see what happens. Don't get surprised. Futures flip all around. Do yourself a favor. Sometimes reflect. Have a journal. For the love of God, have a trading journal. Have a trading journal. Learn from your mistakes. Do not have to make them 10 times over before you learn that, oh, I have a pattern of making this mistake because I write it down. I went back and read that 10 weeks ago I did the same shit. All right, y'all. Have a good night. I'll talk to you later.